It was a few weeks ago that we were told the Nifty trailing PE ratio had come close to around 30 times. PE ratio for the Nifty basically means if you add up all the profits after tax for all the 50 companies that reside within the Nifty, and then you divide that by the market capitalization of the Nifty, you should arrive at a multiple of 30 times. Historically, every time this metric has come up, or let's say we've reached here, there's been a correction of around 10 to 15%. Now, there might be numerous reasons for that, but one key and very important reason for that is that earnings can't justify these multiples. Like in any company, we see when profits are growing at an extremely fast rate and the company is debt-free and even the revenues are growing well, that's when you are able to assign the company a 30 PE ratio, which tends to be one of the higher benchmarks out there in the current market, which we see here domestically. 30 times PE ratio is very high. So it's also important that the earnings are very high. Now in Q1, we all know due to the lockdown that there was supposed to be lower earnings. Now for some sectors, there's been decent earnings, like pharma, for example, has been very decent earnings. Cement has been very decent earnings. Telcos have done well. But however, there's been a whole bunch of traditional sectors which may be suffering due to direct impact from the lockdown as well as the pandemic. So now for banks, which are a key player in the Nifty, you see the largest financials in the country contribute a lot, not just to the Nifty weightage, but also to the Nifty earnings. And we've seen the kind of provisions that have been taken over the last 2 quarters by banks in the thousands of crores. ICICI took a 5,000 crore provision for COVID. Axis Bank took a 6,000 crore provision for COVID. HDFC provisions are also elevated significantly. IndusInd provisions are also elevated significantly. So all the banks, whether they be large or small, but here we're typically talking about the Nifty banks, do contribute a lot to the overall EPS growth within the Nifty. So this year, with the provisions being very high, there's a lot of doubt as to what this EPS growth can be. And then if that EPS growth doesn't come in, what can the subsequent impact on the markets be? Let's remember, we all see it, apart from Reliance, HDFC Bank is a stock which is very correlated to the index. On days where the index is down badly, you can pretty much look at the HDFC Bank stock and see whether it's contributing to that fall or really holding the markets up given its stable or strong performance. So the banks will play an important role. Moratorium has lifted this quarter. While there are going to be one-time recast allowed for certain cases and based on evaluation, it seems that we're entering what might be in banking an extended period of deferral of gross non-performing assets. There still will be provisions that will be keenly looked out for. And if we see a sharp dip in the EPS, then the growth which is supposed to come from private banks, which is definitely in the higher percentages versus other peers like materials, utilities, telecom for that matter, even chemicals, banking has the most significant role to play, and it'll be really interesting to see how the profit numbers pan out to understand what risk really lays to the valuations.